you do have a silent partner in the IRS. Mike and I have been saying for years and years that you have this silent partner and they own 10, 15, 20, 25, 30,
Mm.
maybe even 40% of your IRA. And, just like Ed was talking about, you don't know what that number is until you go to withdraw that money. And, you have some control over how much of it you're giving up to the IRS, because if you're smart, or you're working with an advisor who thinks about the tax aspect of it, when you call them up and say, hey, I want to take out $20,000, $30,000, they're going to explain to you, all right, you have to pay. You take out $30,000. Here's what it does to
Hmm.
your tax return. You take out 50. Here's what it does to your tax return. Not only do they tell you, do you sit down with a tax professional and figure out exactly how much money on that IRA that you're going to pay, but how that money is going to impact the rest of your tax return.
Mm.
How much more of your Social Security are you going to pay tax on? How does that affect any capital gain income? And the one thing that pretty much everybody ignores is how is it going to affect your Medicare premiums? Is it going to take you across that next threshold and increase your Medicare premium? And if you're talking with your advisor, or you're talking with your tax professional, and you're mentioning, hey, I think I want to take money out of my IRA, what should I do? And their answer is, well, if your advisor is saying, well, you need to talk to your tax professional, or generically speaking, we recommend 20% for the Fed, and if you're in Maryland, 7% for that. You're not really getting that customized financial planning. You're not working with an advisor or an advice giver who's really thinking about the taxes and kind of the overarching ramifications. So, I would encourage you to give us a call at 866 597 1040, 866 597 1040, and sit down with Mike, myself, and our team here, and we'll go over your very own tax planning and Roth conversion analysis. Because, as Ed said, and as Mike and I have been saying since
Hmm.
2018, it's still a good time to do Roth conversions. There's never really a bad time to do Roth conversions if you share the belief that taxes are going to go up in the future. And, this is something that we do for our clients every day. And I've got hundreds of stories about this. And, my favorite one is about Bonnie. And, unfortunately, Bonnie recently passed away. So, the joy that I would get from doing her taxes every single year, and seeing her reaction of being so happy, that's gone now. I'm not going
Mm.
to get that. But, essentially what we did, like I said, there's never really a bad time to do Roth conversions. It's just figuring out the proper amount, because when Bonnie came to me way back in 2013, this is the path that Mike and I set her on. She was the one who she came in. She worked for T. Rowe Price. She wasn't on the financial side. She was in, information technology. She had a lot of money in her 401k. She had about 1.5 million in her T. Rowe 401k. She had about another $500,000, $600,000 of T. Rowe Price employee stock. She had some stock that she inherited from her mother. She had some stock, or she had inherited IRA. So she had money in all these different buckets. And when she came in and she sat down with me, I said, all right, Bonnie, congratulations, you can finally retire. Because number one, she thought that she was never going to be able to retire. And, at the end of it, when myself and the team were sitting down and kind of reflecting on Bonnie after we heard she passed away, we gave her 12 years of retirement of that happiness. But what we
Wow.
had done when we sat down was we made sure that she had all these different areas where money was. We started her on a tax plan, figuring out, here's how much money we need to convert every single year. Here's how much money we're going to take out of the inherited IRA. Here's how much money we're going to take out of the T. Rowe stock. Here's how much money we're going to take out the inherited stock. Here's how much money is going to come out of the 401k. And then here's your Social Security. What we were doing was layering the income on her tax return to get her to the point where eventually she would be at 0%